Hey guys, it's Noah from Search and Notify here. If you can understand the principles of supply and demand in this video that I'm going to teach you, you are going to be able to be a consistent, profitable trader, being able to easily pass your phase 1, phase 2 and funded challenges easily. Let's dig right into it. So one thing I'd like to mention before I get started is you have to be very selective when you use supply and demand trading. And what do I mean by that? I'm talking about market conditions here. You want to use supply and demand in a time where the market is ranging. As you can see, and this is where you can continue to use this model consistently to make a lot of money over the span of a year or so. As you can see with the euro dollar, we've been consolidating very much so since December 2022 or the start of 2023 until now. And we are still in this range of just up-down movement where you don't have major trends up or down, just consistent market conditions. What you'd find is these market conditions are usually during a time where political and economic factors are at a very easy point. There's no major wars breaking out. Obviously, I know we have a Gaza situation. However, you don't find COVID, which I can show you here. Through the COVID years, we had a major downtrend. And that's the thing. There are no global impacts economically that are having a direct and powerful effect on the market. Let's dive straight into how we're going to use supply and demand to make money in the market. And this is so simple that you can teach anyone this. I'm going to grab my fib tool, and all I'm going to do is I'm going to find the high of the range and I'm going to find the low of the range. And what I want to do is mark out the 1 level, so that's the high, the 0 level, which is the low, and then the 0.5, the 0.75 and 0.25. And what this will give us is this will give us 3 different areas. I'll turn these into lines so they're easier, which we are going to use that when price goes back into these areas, we're either going to buy or sell. And it's as simple as this. What we find at a range low is we have a lot of demand. We have a lot of buyers willing and able to transfer their dollars into the euro in this area here between 1.05 and 1.029. This is our demand zone. However, what we find is when the euro reaches prices of around 1.1 to 1.13, we see there is now a demand to switch your euros back into the dollar, and subsequently from these areas you find that the euro falls. So I will color code this quickly for you. So at the top here we have our supply, and at the bottom here we have our demand. Simple as this. Buy in this area and sell in this area. But one thing that you will notice, which occurs multiple times, which you have here and you also have here, is price is not necessarily going to go all the way back into our demand zone. Why do we have our equilibrium point? Because that is our target. And very simply, you will just set your limits with a sell position here for a 1-to-1. You can have a buy position here for a 1-to-1, and so on and so forth. And you can continue to do this. Now, what I'd like to say is this is also applicable onto the lower time frame. And I'm very quickly going to run through that with you, is you can take price action such as this here. And once again, we draw from our high to our low. And what do we see? We see once again our areas of supply and our areas of demand. And once again, we have our trade here. So you can drop this down onto multiple different time frames and really profit off the market by just buying in your areas of demand and selling in your areas of supply. What I'm going to do now is drop down onto an even lower time frame and show you how once again we can apply this. And again, it is so simple. We have our highs, we have our lows. I'll bring it onto the 4-hour chart so you're able to see it a bit easier. And once again, we have our areas of supply and our areas of demand. Do you see how simple this is? Once again, buy down here, you can sell from up here, again sell here, we reach our equilibrium, that is the main point, and once again we come up and then come back down. So how are we going to ensure that we have a high win rate? Because not all the time it's going to work. If you were trying to do it here, it might not work. So what we want to look for is we want to look for candles like this, where we see big up and then a big down. And that normally will lead us to a range, which we can just mark out here. And we're buying in this area, selling in this area. Now, as you can see, we also have it in play on these two candles. We have big down candle and then big move back up with this up candle. And we can take our range. And once again, we are selling. You can sell all of this or wait for price to come back into the range first to verify our range. And then you are selling all of this and then you are buying all of this. And look how many times price goes into our demand zone, back up to supply, into the demand area, back up into supply. And what you can use is you don't have to just stick on this time frame for this. You can use this to determine your daily bias and then drop down and use any of the entry models that I've highlighted in the last videos to find your entry during these periods of bullish and then find your entry also during these periods of bearish movement. Simple as that. So this might not be the one stop that you need. This might not be the holy grail where price always respects these zones, because it doesn't. However, it can give you a good indication on a higher time frame of where price is going, and then you can look on a lower time frame for an entry. So for example, we'll have a look at these 3 days here, and during these 3 days we can see that whilst we are in our demand zone, we have an order block down here that we can use as our entry into longs. And then once we get up to the top here, let me redo that. So this here, these two bars mark out our bullish days that we just decided. So as we can see, these are 3 bullish weeks in between a demand and supply area. As you can see, they mainly consist of bullish movement, which is what we're expecting as it rises into our supply area. And your entry can be as simple as this. Whenever a daily low is swept, you can take a buy. And you may be thinking, well, why a daily low to be swept? Because we are bullish. We want to see a daily low get swept to be our liquidity to push us up higher. So you could accumulate a buy from here and a stop loss at the bottom of our area, and you have a 1 to 4.2. You could also accumulate another buy from here, and that gives you a 1 to 1, and then accumulate your final buy just here, and that gives you a 1 to 2 almost. So in that area, we would have made 7 RR off of these 3 weeks, just trading daily price where the low is swept from the previous day. Now, I hope you've enjoyed the video, and I hope you go back and have a look at the charts and you apply this and see how powerful it really is being able to establish a higher time frame bias using your supply and demand zones. Thank you very much for watching.